for showing up. My name is Dave Adams. Today we are talking about the Kroger Company. More specifically, we're going to be talking about the entire family that is the Kroger Corporation. Before we get started, please subscribe, like, comment. Let's talk about this as a stock. So as promised, Kroger is far more than just the name that you may or maybe even don't know, depending on the area of the country that you're located. But this corporation has 2,796 locations plus 784 convenience centers across the country. That equated to $115.3 billion in last year's fiscal year. Based out of Cincinnati, Ohio, you can see a pretty high density there in the Midwest, and that makes a lot of sense. But they have spread out, and you can see a lot of those names tend to group in different regions throughout the country. So look at this map. Maybe you might recognize the one near you. This is taken right off of their annual report, and it gives us a couple of things to talk about. At the top, you can see the $115.3 billion we referenced. A couple of call-outs I had from this was the fuel, jewelry, and medications. It's funny how they don't really talk about food sales on here. I see the production, I see the distribution, I see the donations they do to food banks, but it's funny how they stressed fine jewelry, prescriptions, and fuel centers. And the one that stands out to me on that list that makes me most excited is definitely the medications. 185 million prescriptions filled in 2016. That is absolutely epic. And if you look at that as a trajectory over the last few years, you can see that Kroger has quadrupled their pharmacy presence since 2013. I think this is very important because it helps negate the online conversation and push and delivery services, all the things that caused all the grocers to get crushed this year. Well, one of the things that is true is when grandma needs her pills, you're going to go pick them up. And you're not going to wait 2 days or even 1 day shipping. Grandma's sick now. And so pharmacy presence and having that stable name in your community is something that will absolutely be the backbone of Kroger, going forward. Something maybe not too good to look at is how debt has steadily been rising and currently represents 2.29 times their net worth. And you can see there a bump in 2014 that corresponded with the pharmacy expansions we just talked about. So on the positive side, they've done a good job of diluting this over a long span of time. They can cover it well. But maybe on the not so positive side, it's really hard for Kroger to make a profit. Their net margin is only 1.32%. So look at all the revenue they do to scrounge out $1. And with some of the other stocks that we've talked about, that's really eye-opening. Now granted, the grocery business is a must-have industry, but 1.32 net profit margin is hard for an investor to sleep easily at night, especially when you have people out in the woods trying to come after your castle. And so what does this look like for Kroger and all grocers over the last few years? Well, Kroger has outperformed all of them, respectively, by quite some margin. You can see a really strong rise between 2014 through 16, and then a pretty equal drop-off since that point through now, where the rest of the industry hasn't had nearly the up nor the down. And this is maybe an indicator for Kroger's presence in the industry and what their name represents compared to grocers in general, but it also shows you how turbulent the roller coaster really can be. Over the last year, it's been a rough roller coaster, dropping nearly 33% in the last 4 months alone. So ouch. Anybody that's been holding this stock for that time, ouch. Let's look at some of the ratios and talk about if this is a dead stock or something that we should even be considering. PE is currently at 12.4 times earnings. Profit to earnings growth is an even 1 time. And then the price to book is just under the retail average and comes in at 3 times current book value. So all of those metrics give us optimism for what it's worth. It doesn't necessarily tell us that we've hit the basement, however, but it does show us that maybe this stock is undervalued compared to where it should be long term. One last thing to talk about, as always, the dividend overview. There's a lot of information on this slide. I want to just condense it down to you. In the top left corner, historical dividend, Kroger is paying the highest dividend it has in the last decade of 2.35%. You can see how that's slowly crept up as the stock has slowly crept down. And currently it only represents a 29% payout ratio, so there's still plenty of wiggle room for them to pay that dividend despite how rocky the waters may get. On the right side, I have market cap comparisons with the dividend payout, and this is one thing that made me really excited, was the fact that Kroger's market cap was above Whole Foods, while their payout ratio was significantly lower. And granted, this doesn't include the Amazon backing behind it, which throws off the numbers massively, but it does show you that Kroger was the leader going into this new change. And so they're the one that not only has the most to lose, but also is likely the most able to withstand the storm. And then in the middle there, one thing I wanted to point out is just the insider trading, and you can see 12 months through the last 6 months, all the way up through recently, insiders have been selling off. And in the last 3 months, there's been some purchases back into the company. So people on the inside are starting to feel a little bit more confident as well. So here's what the analysts think. Currently, with a price of $20.80, so a little bit higher actually, I took this photo yesterday, but currently the price falls at around 31% below what its future cash flow value dictates. And this depends obviously on if they can sustain those numbers and continue to sustain that 1.32% we talked about earlier, now that they have some stronger competition in the field. So what exactly are the catches here? First catch for me is it's hard to catch a falling knife. It's really hard to know when to jump into this company, if at all. As the grocery industry changes, Kroger may struggle to adapt quickly enough, especially to the delivery and the online presence that Whole Food will push and likely leverage using its Amazon relationship. The debt consistently increased before this Amazon change, and it could easily throw off the upcoming guidances and ratios we've been given. One thing that we didn't stress earlier, but I put a little red arrow down there, it's probably super small on your screen, but a call out on their annual report was that same store sales growth in stores that don't sell fuel only rose by 1% year over year. That is not good. And I think this is maybe a double-edged sword, because those fuel centers may become a future liability as car expectations begin to change going forward and maybe even become fully electric. Now suddenly you just have some real estate out front that isn't making you anything. So a recap, Kroger has been a falling knife the last few months, especially after the Amazon and Whole Foods announcement. The dividend is currently 2.35, which has reached a 10-year high. So if you believe in this company long term, this is likely an ideal opportunity for you, especially for those who may feel that the online and delivery futures are distant or at least overplayed for the near term. And another big call out was the payout ratio is currently under 30% of the earnings. So even if there is some rocky water, they can afford the dividend in the short term. A big one was the 31% overlay, if you will, between the current stock price and what analysts have for their future cash flow values. And lastly, a recap thing we should reference is the grocery industry's extremely low margin and the 1.32 net margin we saw earlier. And this ultimately just allows minimal room for mistakes as a corporation. So, full disclaimer, Kroger is not currently a part of my profile right now. I don't plan on adding it to the portfolio in the immediate future, though I do have a price in mind that if it hits it, I'll be super interested. So please, as always, subscribe, like, comment. I appreciate those of you that have made it here to the end. Please let me know what I could be doing better. Have a great afternoon.